Well, we're getting closer and closer to the end of our trading week, and let's take another look at what's going on in our grain trade. The corn market had a flurry of activity in the first half of the day, and then it just kind of ran out of gas. So here's the latest with our quotes provided by Bar Chart. March corn now at 592.5. It's only up a penny now. It had been as high as 598.75. The May contract only a half-cent higher. Your new crop December corn for next year actually down a penny now at 546.25. Well, moving on to our soybean market, you have the January 9.25 higher still at 1286.5. March up 10.25, and we're at 1288.5. That's about a dime off of its earlier high of the day. Keep in mind, we had an overnight export sale of 132,000 tons of soybeans to China. So good to hear from that avenue once again, but haven't heard too much of it lately. And we had a sale of soybean oil to India, 33,000 tons there, and that's their second purchase this week. Okay, let's go on to the wheat, and we'll start by taking a look at Chicago wheat here. Right now on the big board, we have the March trading 4.5 higher at 775. It's kind of been stuck here for quite a while. In the Kansas City market, you have the March now 6.5 higher at 810.25. And pretty much in the middle of its trading range. In the spring wheat trade in Minneapolis, you have March now a nickel lower at 1021.75. Well, that's almost a dime off of its earlier high from the overnight and early morning trade. Cotton is down 224 points on the March at 107.44, and that's basically 200 points off of its earlier high. So let's bring in Todd Bubba Horwitz of BubbaTrading.com. and see if we can make some sense out of this. So it seems like we're almost running out of gas here, Todd, especially on the corn market, I noticed. Any idea as to why that would be happening today?
Well, Marlon, we've had a reasonable run, and corn has managed to hold up the best out of the group, and they've managed to stay strong and continue to try to push towards that $6 level. So, again, it's the end of the week. We're in the last hour or so of trading. And you're starting to see, it's vacation for schools and people are starting to leave. And you typically this time of year, after today's close of the equity markets, is kind of the end of the year for traders and firms. Typically, you'll see skeleton crews. So we expect very slow action the next couple of weeks anyways. So, some start to leave a little bit early, and there's not really a big reason to see movement. I mean, but soybeans are looking much stronger. I love the way that they got back over 1250 and are holding. And wheat, I think, is just getting a little bit of a dead cat bounce here. We're going to really have to see what it can do when it gets over $8, if it can hold there. But right now, it's a little bit negative on the wheat markets.
Okay, I wanted to ask you, I'm going to bring up the Dow Jones Industrial Average, the futures. And we have December. It shows December down 252 points, but it shows March down 434. Have they rolled out into March yet or not?
Yes, this is actually what you're seeing in December right now is the scraps at the end. They started the rollover last Thursday, about 10 days ago or 8 days ago. So we're now, we're now in March. And of course, the markets have been very interesting today. If you take a look at all four, the Russell is higher. The NASDAQ was getting crushed and it got higher, and now it's a little bit lower. S&P is down, but the Dow is weighting down everybody today. But overall, they're pretty wild and pretty mixed, which would be expected on what would be the Triple Witching Friday, which is the last expiration of the year.
Okay, we'll come back in a moment and we'll talk more about our markets here on a Friday. Our guest is Todd Bubba Horwitz. We'll be back after this. Well, now let's shift focus, if you will, and let's take a look at, our cattle market. Here on a Friday, we'll go to the cattle futures, and we're a little softer here. We have February live cattle down 80 cents. We're at 136.25. Oh, we're almost $1 off of our earlier high. We're off of it by 95 cents right now. We have April down 47 cents at 140.47. Meanwhile, in the feeder cattle market, now this is an interesting thing to watch. We had it really weak in the knees because, well, they said because we had a surge in the corn prices. But now that corn is almost back to flat, the feeder cattle stayed down there. You have March feeders down $2.30 at 162.02, and it's still over $2.50 off of our earlier high of the day. So even though corn sold off, the feeder cattle did not rally much. In the lean hog trade, February is 62 higher at 80.97, but April is unchanged at 84.87. So nearly mixed in the lean hog trade here so far today. Let's bring back Todd Bubba Horwitz of BubbaTrading.com and sort it all out. What's going on here with this cattle market? It seems like it's having some technical issues for some reason.
Well, Marlon, I think they're starting to weaken a little bit. You know, the feeder cattle is actually starting to break some technical spots, and looks like it may be, unfortunately, a shorten here. The fats have been a little bit negative for a while, and hogs are, still look okay, but they're starting to weaken as well. I think one of the big things we have to think about, Marlon, is the cost to now do everything with cattle and grains as far as that's concerned, the supply chain issues, and the overall inflation and the cost of fuel. So there's a lot of problems that are creating issues in all these markets, and I think that is leading to some of these lower prices because I think we're gonna have some trouble with production because we can't deliver. And you've got, just so many high costs right now that it's taking away some of the demand.
When you look at that drop that we were talking about over in the Dow and the equity markets, how much of a weight is that when you take a look at the cattle and hogs right now? Are they still kind of connected or not? They used to be.
They are connected, Marlon, but there's a big difference now. What used to be a big move in the Dow, remember the Dow's at 36,000 now. So when you look at a 400-point down move, it's just slightly over 1%. If you look at feeder cattle, they're down just under 1%. So it's really, if you look at the correlation of percentage moves, you can see a much better relationship. The prices have gotten so much higher in the equities that they look like they're big numbers, but really percentage-wise they're not. And that's the biggest thing we have to remember, is the number itself isn't important, is what is the percentage of the underlying? And that's where the issues come. So that's what we got.
All right. Well, thank you for explaining that good stuff. Thank you, Todd. Todd Bubba Horwitz of BubbaTrading.com in Chicago. You have a good weekend. We'll talk to you soon. Tammy, with that, I'll turn it back to you.